everybody's doing well. It's been about a month since our last live stream, and Mike and I have been busy on the back end working through some charts, and we've seen some really interesting price action. I don't think it's kind of the price action that everybody was looking for here. I think a lot of people were expecting a deeper dive kind of earlier and that sort of thing, but it's going to be interesting to see how this plays out, because if you know my charts, we've been watching the three levels, and we came back down to the middle level, and then we pushed back up to that kind of breaking point where we might kind of actually be looking bullish. So we'll see where things go from there. We are definitely live on YouTube, so I'll pass things over to Mike to take a look at Bitcoin and what he sees happening out there right now.
Did you say the B word, TI?
A little bit, yeah.
That's I mean, they're both B words, so it's kind of.
There's like Bitcoin bullish and bearish, so technically it's the three.
Bullish word. That's the one I was going for.
Yeah.
So I will steal the screen here from you, and let's just take a look at what we've got going on over here. Here's Bitcoin. Now, this may not look like what you've been looking at recently, and that's because I did a little replay. So I've rewound us back to January 18th, so just about a month ago. And we were still in the downtrend channel. So let's just zoom out. Let's get our bearings here. It's been a while since we've sat in the room together. And, here, all the way back, here's COVID. And then we have this insane run in a matter of, a year. We ran all the way from that low at 45, just a cash 1,200%, no big deal. And ran all the way up into the 60,000 range. Now, a lot of you who've been here for a while know we were watching this almost like the 2017 run. And the 2017 run essentially died here, right about 40K. And it made a lot of sense. We hit a lot of targets that made a lot of sense. And then we did a serious pullback. Now, it doesn't look like a lot on log, but that's a good 30% pullback. That's significant in the stock market and any traditional markets. 30% is, something bad's happening. And, we never quite broke down again below 30K, not solidly. We leaked down there. We got some shorts probably on the hook, cleared some long leverage, and then we bounced 60Ks, came all the way back and bounced 60Ks, came all the way back, tapped, made a bit of a flag type pattern here, broke it through, and went all the way down to this bear flag target we'd had on there since all the way back here when we were forming this potential flag type pattern. And it hit straight to the target the first time. And I was pretty, what's going on here? And then as we started to realize we had a giant downtrend channel, okay, that made sense. We bounced off the bottom of the channel. And if you look left, there was a little bit of stuff going on there. Nothing's too bad, but I have the feeling it was that 25K psychological number. People started to buy again. Whoa, it's 25K. Oh my gosh. And we bounced, and we dead cat bounced and went all the way down to underneath 20K. And this was our long-term trend target. Now, I had anticipated more likely that we kind of made our way down over this period of time and hit it down here in the channel, but we broke all the way out of the downtrend channel, just fell straight off the map. And there's some interesting stuff was going on during the summer. There was a lot of FUD happening and a lot of selling, obviously. I mean, that's a pretty significant spike in volume here if you look at all the volume around it. But we survived. We held that 20K area until right about here in November. So this was last November. We broke all the way down, and we came all the way back to this downtrend channel line. Now, this green line we've got here, if we zoom all the way out, this is a long-term logarithmic trend line that goes all the way back to 2015. And even when they initially came up out of Bitcoin's birth, basically, on the marketplace. Huge spike here back in 2013. People still talk about it to this day. 500% run in, April to March to April, about a month. And then they gave 80% of it back in just a matter of days. So huge volatility, the likes of which we haven't seen for quite some time. We haven't seen an 80% pullback in a few days since I've been watching Bitcoin all the way back in 2017. You get pretty close here. You get a pretty good pullback here in 2018 when we collapsed about 50%. But nothing like that 80% volatility Grabbing my lines here. So now here we are all the way back, and we still have this logarithmic trend line in green here. And you can see Bitcoin still knows where it is. This market is still tapping off of that line, even to this day. But we broke it. And that was a pretty significant, okay, we've broken the long-term logarithmic trend line. We haven't done that in years. And we're underneath all the moving averages. You can see you've got your 44, your 100, your 200, and your 300 moving average. These are the taco moving averages here. And you pretty much see the same thing if you look at the standard 50 and 200, right? We're underneath all the moving averages. And if you know anything about basic TA, when you're underneath all your moving averages and they're all trending down, you're in a downtrend, a pretty steady, significant downtrend. And it wasn't until here in January that we broke through some of these moving averages. So just in the past month, this happened in January 5th. So the past month and a week or so, we broke through the 50 moving average. We broke through the 200 moving average. We broke all the way up. And now I can start to play a little bit of my replay here. And I just want to go forward a little bit. There we go. We broke all the way up and we tapped the 300-day moving average. Now that's pretty significant. 300-day moving average is a very large time frame moving average. And to tap it when we've been underneath, all the way down underneath the 9, 21, 44-day moving average, we did that in just about, what, January 8th to January 26th, couple of weeks. And we couldn't quite hold above it for long. We couldn't keep it up there. We fell underneath that logarithmic long-term trend line. And so we had a lot of decisions to make in this area just in the past few weeks. There's been a lot of what ifs in the past few weeks. And if you've been following this market for years, like we have, if you've been in trades active, like I know TI has, I've been doing a lot of stuff with nodes, with iNodes and Raptorium. Those of you who know me for a while, I'm still in the background doing that because a bear market, for me, that's time to build. That's time to dollar cost average. That's time to accumulate. That's time to build positions. And when the market moves, you get out your initial capital and you have a portfolio of essentially free coins. That's the whole idea, right? So at this point, if you're in any positions, you have a pretty big decision to make until they hold this area and then they push a higher high. And that's just what happened. So there was a huge possibility that they kept going and they fell back into this downtrend area. But the market said no. Market said, we're not going back into the downtrend. We're going to try something different. And we've now made higher lows, higher highs, and we're back above the logarithmic trend line. And we're above, solidly above the 300-day moving average. And you can see crossovers on the lower time frame moving averages, crossing over the larger time frame moving averages. Here's a golden crossover, the 50 crossing over the 200. That is a significant sign in traditional TA. All of the signs here are pointing to some kind of recovery, reversal, trying to turn this ship around into an uptrend. And we can say that with pretty good confidence at this point. Now, that doesn't mean that in the short term, they can't do something and trick everybody. You're not out of the woods yet. You can't just go throw money at everything and close your eyes and hope for the best. Maybe if you're working on year time frames and you don't care because you've got extra money. Most people who are trading with smaller sums or they're trading with their expendable income, but they still have a day job and regular bills. That's me here. You can't really, if you're watching this in the short term, it's going to be paying to buy here if the market pulls back. So if you're not already in positions or you are not trading on all charts that have pulled back in this and given you a good entry, you'd be hard pressed to just buy Bitcoin right here, sticking straight up and close your eyes. That's a hard sell for, that's a hard buy for me. I should keep my puns accurate. That's a hard buy for me here. But as Bitcoin establishes on this trend line, there's no reason you can't take bites. There's no reason you can't position yourself with reasonable position sizes. So you have 5K on the side you want to trade. You could buy a few $100s of Bitcoin here. It's not going to put you out any. And if they pull back, you can throw a little bit more at it. That's how this game works. But if you go throwing all of your 5K on the table here and they decide to pull back to 20K one more time, you're going to be stuck until the market is ready to move again. So Bitcoin is making very positive signs. I mean, at this point, the deep bear market target is looking less and less likely. They came really close. We had this deep bear market target on here since all the way back in January. And for them to come within, 10, 12%, some people think, oh, if you don't hit right on the money and your candle doesn't go straight in there, your TA is wrong. For me, that's pretty dang close. We hit our bear flag. We hit our long trend target. This was the least probable. You've got all the way out here on a 1.618 on a pretty significant set of local extensions here. And then also this is the 618 on the very, very big picture log pulling off of COVID. Now, if you pull off the very, very bottom, right, this 618 hits at about 10K, and we've come down underneath the 382 and made it halfway there. We don't have to go all the way there. They don't always go to the 618, especially the biggest, largest, most voluminous chart that we have in crypto. Bitcoin may be done going down. And if that's the case, then we are essentially running out of time to get the best positions available in the alt market. Now, it doesn't mean you got to go out there and throw all your money at it, but it does mean you have to really consider your current positions, what you have left you can position, and how can you do it safely while protecting your risk. That's your biggest concern here.
And that's been a big part of what we've been growing into the value zone. We've really set up a structure to stimulate our ability to make profit. It's not a guaranteed thing, but if you're not adapting your system to the market type, you're chasing it. And if you're chasing the market, you're going to be in a position sitting here right now with no Bitcoin, no alts, and no position, wondering what went wrong. Well, you weren't positioning yourself appropriately. And while there's no guarantees, and we could still go down to 10K or 14K or lower, who knows, the idea that you're waiting on the market means you're already behind it. So that's what we've been doing in the Discord, is getting into positions aggressively at times. I'm going to go over a bunch of positions that we've been aggressive into for 10 days now. And almost every one of them, I think we got stopped out of 2 of the about 10 different aggressive positions, and the rest are all sitting in great profits. This is that position where you get, like Mike said, choices to make. What are you going to do with those profits? What are you going to do with any capital you've got left in the market? And you've got a difficult choice. There's no question about it. You need to understand where you are in your system. But if you don't even have that choice, what are you doing sitting here? What are you doing watching Bitcoin continue on? What are you doing the last, how long have we been down here since FTX? Well, I mean, FTX was the last straw back in November, but realistically, we've been talking about valuable Bitcoin below 20,000 since last June. That doesn't mean I've stacked huge bags. The first time I bought in this bear market was at 28K. I'm underwater on that buy, but it's such a tiny buy compared to the other ones that I made at 25 and 20 and 18 and lower, that I've dollar cost averaged into this bottom, and my average Bitcoin price is about $20,000.
Which is
that
not
okay?
Place to be sitting,
Am I okay with that? I think that's a great price for
that's
Bitcoin.
A great place to be right now.
Yeah.
With it looking like it could turn around. Because if you got into Bitcoin at 20 and we start not looking back and doing the types of movements we know Bitcoin can do, you're sitting in a nice place. That's essentially catching the bottom. Everybody wants to talk about catching the bottom of the market and how do I buy the maximum at the very bottom, when in reality, buying at the bottom looks much more strategic. It looks much more calculated. It takes time. It's not just one buy that you bought everything at a certain price. It's studying the market long enough to know when to start buying, and then when to really leverage in around the area you are high probability that the bottom's gonna be somewhere around here, whether it's 10 or 20. If you're looking up from 60 all the way down to 10 or 20 and you get there and you can get in, that to me is getting at the bottom. So I know if you've been following TI the past 6 months, he's been scoping out some of the most advantageous charts in a bear market that you could hope for. I mean, to be up in 8 out of 10 positions in a week when Bitcoin is taking off and likely crushing some of the charts. I'm certain if we look out there, there are alts whose Bitcoin sides have been decimated as people sell out to Bitcoin while Bitcoin makes this move. And if you're not aware of how to identify which charts are ready to make the move with Bitcoin versus which charts have made the move and are likely to be corrected by Bitcoin, you're not going to end up with 8 out of 10 positives like TI. That is something that takes a lot of skill and a lot of time and a lot of study. Do not think that it's easy. TI makes it look easy. But when he says 8 out of 10, I, as someone who's been doing this for years, I know that that is a huge, huge amount of work and effort that went into that 8 out of 10. So well played, TI. Well played. And
before we move into Ethereum there, I'll just I get asked about my kind of vision on Bitcoin, and I do share quite a bit with our community members in our recorded videos 3 times a week, but not everybody gets that. So I'm just going to grab the screen here for one quick second, and I'll just briefly outline what I've been talking about here. So on my Bitcoin chart, I have 3 zones, as I mentioned in the intro. We've come up, rejected off of the top zone, come back down to the next zone. We failed to penetrate after the golden cross here, which is probably some of this low volume pump that we've seen back into that upper zone here. This is really an important spot for me. For what I'm looking for in the price action of the market, this is that first barrier to calling this market bullish. We need to get above and maintain that $25,000 mark. And my second mark that I want to get above and maintain, where I will say, you know what, this was the bottom probably. Odds are leaning that way. It's that 28.5K. I've seen some people put their kind of bullish markers much higher, but the interesting thing about this rise that we had and the setup that we've got below us, we definitely have that target that everybody is aiming for, that 14 to 11K mark. Everybody's talking about this zone. Most of the bear market, especially the last little bit after FTX, oh, we're definitely going lower. We're definitely going lower. But this is very similar to the conversations that people were having back here in 2018, 2019. Oh, it's not over yet. We didn't get to quite our exact number down here. No, this isn't real. This isn't real. And then it gets going. Where are we in comparison to that? I would argue that it's a totally different structure, just like our top was a totally different structure. I think this entire leg up is its own structure. And if we never see $14,000 Bitcoin again, that makes a lot of sense. It really does. If you go back and you look at other markets and other bear markets and gold or even stock markets, this is a pretty significant and fairly complete retracement of that move out. Now comes in the fundamentals. And this is my one problem with getting bullish on the price action and the technicals of Bitcoin. There are so many faults and failures left to be exposed in crypto. Right now, we're seeing the US government dance around an idea of chasing after Binance. Binance has admitted we are probably going to have to pay some fines. We are adjusting ourselves to try and be as regulatory compliant as we can. This is the big conversation that comes next. What kind of access will one of the largest markets in crypto have? And that's America, that's the US, after their regulations kick in. Here in Canada, we've seen this already, especially in Ontario. I don't have access to Binance. I don't have access to the majority of altcoins. And where I do, it's very low liquidity and not great. Where I have access to a couple dozen altcoins, I have to give all of my identity, all of my information over, and there's almost no way around it. Do we need to push into DeFi? I think DeFi is going to be a huge advantage. The problem is it always runs on Amazon web servers and other places that are very centralized and easy to control. My problem with getting bullish on Bitcoin right now is the fundamentals and what we have to overcome in front of us. We want to believe that we've been at the fight us stage of adoption. And I don't know that we have. I don't know that we've seen the worst of it. This bear market has been balanced, pivoted on this fraud scheme that's slowly unwinding. Each step down has been a different point. And the fallout from FTX is really kind of the introduction to how poorly managed this space is. And I don't believe that we're done with the purge just yet. That's my problem with getting too bullish on Bitcoin. That said, my price action, my charts, my vision of what I'm seeing in there with my fundamental brain outside of it, those are the levels. You're looking at 25K, 28.5. Hold those levels. Let's get out of this hole and set this up. And I think there's really a very good possibility of that right now, barring something in the next probably month or so. if you're not familiar with what's happening in crypto, March is a massive month. We're seeing huge Ethereum upgrades, massive legal issues being settled. We're watching some of the largest creditors of the old stuff, Mt. Gox settlement, actually saying, we'll take the Bitcoin. We don't want the money. We don't want the US dollars. And they're going to get that this year, guaranteed now. There's so many things happening that it won't take too big of a slip up to see another sort of FTX-like event. That said, probably won't be in the multi-billions like FTX was, but I'm watching for it and we're going to be ready for it. I'm going to show you how we're going to position our aggressive entries here shortly that we got into. I'll show you what they are here. They're in our top charts list for now. I'm going to show you how each of these are positioned and where I would be at this point, 10 days into these trades. We'll take a look at what's left, but I'll hand it back to Mike to take a look at Ethereum here.
Love it. Love it. I mean, I love how we still, to this day, we have somewhat different visions or approaches to it, but we often have the same kind of framework. I mean, we're both looking at that here. This may be it. We may be going bullish, but I know, you know, that I know there is a lot of dirty water still out there in crypto. And there are plenty of reasons why this may not be it. We may not have the final turnaround here. We may still have some nastiness, some trickiness to get through, some long liquidations. There's still a lot to be said that may be going on here. So let's take a look at Ethereum. So we looked at Bitcoin in depth. Is Ethereum giving us the same signs? Well, you can see TI's pointed out. Here's the golden cross, and I am borrowing TI's chart on this one. I've got an F chart somewhere, but I like what TI's got here. So I'm going to work with this for the moment, and I'm just going to add one thing. My handy dandy retracements, just so you can see what's going on here. We bounced almost perfectly off of that 382. We leaked a little bit, but we hit it, came back, bounced off the 236, bounced off the 382 twice here, and now we are headed back up, looking up again at that 236 at about 1900 level. And if we break it and make it into the 2000 solidly, that's another positive indication we may be in this kind of a bullish market turning around a bottom. Now, this doesn't look like much of a bottom, but you've got significant sell-off, you've got a pullback, you've got a higher low, and if you get a higher high next, this was our last local high at 2050. If we get a higher high next, that is a big positive sign for a potential turnaround. Then you can start looking at some kind of a where are we going with this. Now, that still means there's plenty of room to come back. They could come back 20% and still make a higher low at this point. So in the short term, we have to keep that frame of reference. We have to understand there's still risk on the table. But in the big picture, this is still positive. You've still got higher high, higher low, golden cross. If I look at my other moving averages, we did it. We're above the 300-day moving average, just like Bitcoin. Those are pretty strong signs. We have not been above the 300-day moving average since all the way back in April, and we only did it briefly before we rejected. The last time we carried solidly, the last time we broke above the moving average from below it was all the way back here at COVID, and we only dipped underneath it during the COVID event. After we got back up over it and bounced off of it, game was on. It was time. Here we are now, just starting to break back above it. So we may potentially be calling ourselves in this area. From a market cycle perspective, I don't mean that we have to have a COVID meltdown and a lower low. That may not happen. This was almost lucky if you were not in the market yet, because you had a huge golden opportunity here if you knew how to take it. But if we're here, there's still a good chance of a pullback and some kind of a sorting things out above this moving average before we make a higher high. When we broke out of that 300-day for the first time, it was February. We didn't make the higher high until August. So we've still got a whole summer to get through. We don't have to put the cart before the horse and get too excited here, but we can start to change our mind a little bit. We can start, as TI said, to change our approach to the market, our system should be shifting. Our general plans and how we interact with the market may have to change. And this is the time when we have to start thinking about that. How do we do it? What is a bullish market like again? What did it look like? Is this one going to be the same as last one? Probably not. There will probably be charts that went crazy last time that stay flat this time. There will be charts that are brand new that were never here last time that will probably do thousands of percents this time. There are charts that may do thousands of percent again that did it last time. Who knows what baby Doge, Shiba, Bonk, whatever coin is going to do this time. Who knows? But if you have rules in place that work for you and you have a system and you know how to interact with the market, it doesn't matter. It's just a matter of which of the best ones can I get into and position well so that I can literally let the market carry me up with it. That's the name of the game. When TI is looking at these positions, he has 2 that didn't work out. He doesn't care about those 2 anymore. They're gone. They're done. They didn't work out. Who cares? It's the 8 that are working out. How can I make them work better? How can I press those winners? How can I stay in the ride as long as possible to maximize my profit while doing it in a safe way so that I don't expose myself to more risk? F is not in a place where you can just go like Bitcoin and buy a bunch of it right now. It's just not. It may pull back and give you some of an entry, but it is down enough in the big picture. You could be taking little bites, manageable bites. Got a spare $100, really like F, want to throw it in? You could do that here. You may have to watch it pull back a bit before it really takes off. But this whole area, since we broke underneath about where we are now, you could have bought 100 here, 100 there, 50 here, 25 there, and been accumulating. So that when the breakout does come, you're not sitting there going, gee, I missed it. Should I buy now? We're going bullish. Now do I buy? There's a big green candle. Everybody's excited. That's the worst time to buy. So if you're going to do it, now's the time to decide. Know that you are underneath the resistance point that may reject you again, but you are above all the moving averages crossing over, and you may not get the chance again. And you have to rectify those within yourself and be happy with whatever the outcome is. If you cannot put yourself in a place emotionally and psychologically where whatever you do right now and whatever the market gives next, you're okay. If you're not there psychologically and emotionally, the market is going to bite you hard. That's where all the preparation comes in. That's the whole point of getting your head on straight, of understanding the psychology, of having a plan and rules to stick to so that you can leave the emotions behind. If you didn't get in here and all of a sudden tomorrow, F jumps to 2,300, so what? And if you're somebody who's been following it this whole time waiting to buy, and then it's so painful, so what? Close the chart and go away. Go do something else for a few weeks. Who cares? Or accept that you missed this one, don't be emotional, and go look for the charts that pulled back that are getting set up to follow the move, because they are always out there. If you can get yourself into a mindset where you recognize there's always an opportunity somewhere, then you can take a hit emotionally of a candle going straight up in the air that you missed and move on, and you can find something else. It really should not be a chase. You should be in position waiting, and when the market strikes, then it gives you an opportunity to take profit. Now, if we look over here at F Bitcoin, we've got a nice triangle, and we've jumped into it from down below. Most of the time, that means a continuation exiting in the other direction. So F Bitcoin is set up from a pattern-only perspective to break out to the upside, but you also have to understand fundamentals. F has moved to proof of stake. A lot of coins in F got locked into proof of stake that have not been allowed to be released for quite a period of time. And there are quite a few people that are very vehemently opposed to the way F did the 2.0 staking rollout. And some of them have coins locked up in staking in F. And some of them are very angry. And there may be a time when those coins are finally released that we see a pullback on F. But until they tell us it's happening on such and such a date or such and such a block, F looks like it's getting ready to go up with Bitcoin, and maybe even more than Bitcoin if F Bitcoin breaks out. And the last thing I'll look at before I hand it over to TI to look at some alts, good old DXY. So what's been happening with the DXY? The entire run up, this DXY was going up while Bitcoin was going down, right? Here was Bitcoin peaking back in January, March, April, May, January to May, Bitcoin doing the double bounce on the highs. The DXY was doing a double bounce on the lows. And then we had this inverse relationship really sorted out while the DXY was going up. Inflation out of control, all the COVID spending, the US print 80% of the monetary supply in 2 years. Crazy stuff going on, the likes of which we've never seen in our lifetime. Our parents had never seen, our grandparents had never seen. They don't talk about it on the news or mainstream media because people don't understand. They don't understand what it means the US print 80% of the existing outstanding US dollar supply in the last 2 years. And then all of a sudden, oh, inflation, where did it come from? What happened? Like people got caught surprised. We've been talking about this for years, TI. We were talking about this when record numbers of CEOs were exiting their positions in 2020. Something fishy was going on. Some people knew that they weren't talking about. And then it hit and we understood. And Bitcoin pulled back and the equities pulled back. Now, finally, after banks raised, the Fed raised the interest rate policy for the cost of borrowing money up from zero, what it had been for an unprecedented amount of time at a rate never heard of before. It had never been free to borrow from the Fed, by the way, before all this. That was not a thing. Unlimited quantitative easing was not a thing. $1 trillion overnight repo markets doing stock buybacks was not a thing. Now all of a sudden we're paying the price for it. The dollar finally lost some strength. The party's over and we get a little bounce off the 50 and now we're stuck at the 382. The DXY is in a perfect position to turn around, head down to the 618 and give Bitcoin, equities, and everything that's taken a beating some breathing room and a chance to run finally. This is one more potential positive note you can notch on the list that we may be ready to make a bit of a bullish turnaround. I'm excited. I'm not emotional about it. I'm just ready. I am so ready for this because we have been waiting for so long. And I know there may be a few months left. We may not be quite there yet. But it feels like we're almost there. And if you've been doing this long enough and you get that feeling, you know the time is almost there where people will cry because they didn't buy enough at the bottom. The market's running away from them. They are going to chase coins, chase charts, buy green candles, sell on pullbacks, take losses that make no sense in the big picture because when you're in a bullish market, if you get a pullback of 20, 30%, most of the time you should just hold on. Unless it's a fundamental reason that coin is dying and you know it's BUSD and it's going to get delisted because of a regulatory thing and you really it's FTX's FTT token and you really shouldn't be in it anymore because it's shutting down. A 20% pullback in a bull market is a burp and you should sit on it and wait before it goes back up to a higher high. But if you don't understand that context and you got in at the wrong time and you don't have a big picture frame of mind reference, you're going to lose money and you're going to give it to people like us that are ready to make the money. So whatever you do, whatever positions you're getting into, whatever you're looking at out there, understand there's always one more thing left on the table. There's always one more reason why maybe it's not going to do what I think it's going to do. Here we have a little bit of a gap on the CME's futures all the way back at 20K. And there is no reason why Bitcoin couldn't do a 20% pullback to close that gap before we make the turnaround and still be bullish. Bitcoin could come back to 20K, make a higher low, which would be fine because it could be a part of a little bit of a low dip here and a little bit of a channel and still be bullish and be turning this market around. And if you don't understand that, you are going to get caught off guard.
For sure. It's interesting because you talk about your charts and 20% pullbacks in a bull market. I've positioned myself differently than you, And we both had such great success during the last bull market and everything else with our totally different trading strategies. And it just comes back to me every time we do these rooms, how we chart differently, how we see things differently. But the conclusions are almost always very, very similar. And there's very rare cases where like we're both wrong ever. It's at least kind of, we're both mostly right, both completely right, or one of us wasn't quite right, but the other one definitely was, because we're just so close. And it's a testament to how TA works. TA is not magic. TA is not something you have to practice off of somebody else. TA is something you have to learn for yourself and really understand you, because your position sizing and the risk that you put on the table and how those two things, and how that relationship plays out, that's exactly what allows you to be successful. And that's why you can look at the positions that I'm going to show you here and fail, because you didn't have a plan. You're following somebody else's charts and ideas. I love looking at other people's charts. I love seeing other ideas. They're maybe looking at alts that I'm not even looking at. So I get a quick look at a chart that I've not seen in many years. I love when people request charts. I had ONT and ONG requested in a direct message there not long ago. So started charting those breakouts and watching what's happening there. Now it's all looped into this whole China conversation. China coins are a big conversation. We had a little bit of a talk about that in the Discord this morning, and I'll cover that very briefly here after we cover our top charts. But the way that we've structured the trading here at TradeX is we have a level of investment opportunities, and we have identified a few coins. There's more of them, but we've identified value opportunities. And this is where you're able to put in small amounts for longer term investment. And if we go through these coins real quickly, we hit the value zone on IOTA. We hit the value zone on GRT. We killed the value zone on Engine. Algorand broke its value zone, is back at the top of it. These are still very valuable buys in those zones. Filecoin doesn't have its value zone on it. I think that's because it's over here, and we're going to get to that. Yep. Again, another one broke its value zone, right back into it. This was looked like Digital Currency Group was selling on over there. But these opportunities are those positions that you're into at very low levels where it might still go down 50 or 80%, but it's not enough money locked up and it's expected to be there for quite some time that you're too concerned about it. Because when those value zones work out and when you can get out of them, you immediately start seeing on the top, smallest little bit of bullishness that we're seeing in the market right now. Very few people are saying, we're 100% bullish. This is the bull market and we're going again. I call it a transitioning market. And if you've been following, we've talked about how trading changes from a bear market to a transitioning market to a bull market. But you immediately, during the early stages of that transitioning market, see huge gains, 200% here on JASMY. That's great. That's awesome. What do you do with positions like that? Well, you make a choice. For me, and the way that I've structured the value zone, and there's a whole level of guidance in the Discord for our community members about it, is that I get my money out of the way. And now it's just a nothing bucket. It's a bucket of nothing. But the catch is that when you buy something like VRA in October of 2020, at a valuable zone, it loses 60 or 80%. I didn't even know it did. And then it rallies for 8,000% during the next bull market. That small amount of money at 6, 7, 8,000% turns into a pretty significant amount of money. And depending what you're trading with and what for you and your system you can forget about, that value zone strategy could be all you need. You don't have to suffer on a daily basis trading. You buy the extended zone and short from the top, where things are overvalued, overpumped, and overhyped. Elon Musk is on Saturday Night Live pumping Dogecoin. Yeah, that's that time. And then we've got this lower level of despair where there are really important fundamental projects out there that are going to be a big part of not just the crypto ecosystem, but the global ecosystem in the future. And that's what we dig into as we try and find those gems. Not all of them are micro caps, but ones like JASMY are doing very important big things, especially in Japan. And they're showing a lot of growth and development during a period where that's very difficult to do. A lot of things looking up there. So that's how we work the value zone. Top charts, this is where things get a little bit back and forth, depending on where we are in the price action. And I base almost all of my trading off of price action. Depending where we are in the price action, we go from very conservative, sometimes not trading at all for weeks, to a very typical kind of movement up, a very stale point where we have performed the best. The aggressive trades, This one was exceptional. Our last aggressive trade entry, I think we had 5 or maybe 6 trades open. I think 2/3 of them closed flat. One took a slight loss, and 2 of them actually worked out. And that's pretty normal for trading, especially if you're being really conservative about your capital. It's okay to take a trade and not make any money. It's way better than losing money, especially in a bear market. And if you follow with me in the Discord and our community members, you know how much I hate losing money. I don't hate losing a trade. I hate losing my money. And that's why this system has allowed me to get my capital out of the way as early as possible, protect that, get ready for the next opportunity. There's always an opportunity in this market. Let's take a look at some of these alts and see what they've done. We got into CELO on some fundamental news here at the bottom. They had some major developments, and they definitely kind of set up that double bottom. You'll notice a lot of these alts are going into their golden cross here as well, getting a lot of that hype behind them. We broke out above and started building on a lower time frame some good volume where we very quickly dumped right back into where? Right back into those moving averages, right back into the top of the double bottom. And what's this white line up here, you say? What are we looking for here? Well, we wanted to look for a pullback here. This was super aggressive, and this was all of these entries were taken on the 10th of February. And what we wanted was this line here. We wanted to come down and get that confirmed entry. That's a much more conservative entry. Now you can see both basically have the exact same entry point, and both have done very well. Why such a small target? Well, we looked left here and started measuring out kind of where some of these moves have gone, and they haven't really done very well completing any bullish sort of moves in recent times. That said, there are some important fib levels and some other things that we've covered where we said, this is more than enough. I will take a 6 or 7 to 1 trade any day of the week. In this position, it doesn't look like a lot right now, but CELO is doing pretty decent. This is that point where we're sitting at 24, 25%. And I say, I'm not going to lose my money anymore. I don't want a stop loss on this. Sometimes I get much more aggressive and I'll go down into the lower time frame. I'll go find a spot where I think I can get away with moving my stop loss into profit. I like that this is above both moving averages. It's a higher low. We're setting up a higher high. I'm going to lock in 11 or 12% of my trade at that level, and that's my new stop loss. I'll quite often do this as well, especially in a bear market. There's nothing wrong with taking smaller profits because of the volatility of the bear market. And if you've been in the Discord and you're in the community member section, you know how I talk about volatility when the transitioning market comes. If you thought a bear market was bad for volatility, you hold on. Transitioning markets are the worst. You will get the heavier chop. Bull markets will have stronger pullbacks than bear markets because a pullback in a bear market is typically bullish. What have we been looking for in this bull market for months and months and months and months and months? I've been looking for a FOMO rally, a fear of missing out rally. We haven't got it. These aren't rallies. There's nothing to write home about there. We're finally above moving averages, golden cross conversations. China's back. We're ready to go. We're breaking some important levels. This is the point where fear of missing out. And we've identified this area all the way back here, even before FTX. I said that high $20,000 range is my FOMO area. Absolutely. And it looks like we might be going to get it. So we're starting to transition. Things are getting dicier. And these positions, I will aggressively move my stop loss in behind. And if that's my position and I'm not in this one, I'll let you know which ones I am in. If I am in this one, that's exactly where I'm moving to. Let's move through these a little bit quicker. Curve came back, golden cross, perfect break out of that, what should have been a bull flag. We got a little bit antsy behind the bottom of that bull flag. Again, very aggressive entry. You can see February 10th at the bottom there. Very aggressive entry. A lot of these took heat and a bunch of them got stopped. And I'll show you the ones that got stopped as well. So you can see us taking some heat here, but we're back in below the golden cross and of course that major moving average. And I said, you know what? This is like a balls out move. This is not appropriate for most traders. We're buying into the bottom of a pattern that may or may not hold. These things have not been doing all that well, but I really like this Adam and Eve double bottom idea. I really like that we came out of it. We basically got our entire target with this bull flag. If they're going to honor the double bottom and hit that target perfectly, why don't we put the flagpole on top of that and let's make another move out here? Then we look left and we say, well, do we need to make a new higher high? No, we don't. And so we cut it early. A 4-to-1 trade for 30%, closed, done, nothing to write home about. Is that the end of it? I don't think so. I think curve's going to be just fine. They're probably going to come up, and my next major level for them is 188. Moving on. So I would close the curve trade that we posted is closed, but what you're looking for is either that bull flag target back into the top over here, so that 150 range, or you get back up to the next area of price action, probably clean up some candles in here around 180, top end of 188 there on curve, and that's what I'm looking for out there. FET is a flop. We traded this one on the way up, got out of the way, and then they put in this weird pendant, and then a consolidation, and then whatever the heck this is, starting to look pretty toppy to me. So while this one is basically break even, it hasn't been stopped, it hasn't succeeded. It's a 6-to-1 trade for 100% possibility. How did we measure that? We measure into the consolidation. We're going to pretend that's not a pendant because it's mostly on a lower time frame. We came up, consolidated, come up. Flags, pendants, they all operate the same way. You get in what you put out, and that's where that target came from. Especially since looking left, we know that we've already broken the recent high. This one's pretty inconsequential at this point, but almost matches our previous top. So our next option is actually below our target. Not bad. I don't mind those odds. I love the percentages, and I think it's very, very possible, but FET has already done just a monster move. That AI hype, there you go, 1,000% in a bear market. Is it a bear market still? No, it's a transitioning market. We're going to see higher volatility, higher gains, bigger losses. If you don't have your system locked in, you're gone. It's over. All right, so Filecoin. We got our big dump on Filecoin back into the value zone here, and we pulled back to the exact perfect level that we wanted. Is this a perfect bottom? Heck no, that is ugly, but we'll take it, especially when you pull back, stay above your 50 moving average, and start getting off the floor. This is exactly what we were looking for, and it exceeded all of our expectations. So this is a 5-to-1 trade for about 32%, back to where that dotted line is a pretty important level of resistance. And even on lower time frames, you keep an eye on that dotted line, barely hesitated. There is a fire lit under this thing right now. And under this conversation of China coins, Filecoin is actually being lumped into China coins right now, but it is one of the leading decentralized storage platforms for this industry and has shown exceptional growth through the bear market. Huge partnerships and growth, pretty awesome stuff. We easily got our 5-to-1 trade. We did take heat. Don't ignore the fact that you had to have patience, you had to have the ability to stay in this thing. But there you go, February 10th, right there. And that's our entry. We held up our stop loss. And here we are watching this thing run for 92%. What a dandy. FTM, again, took a lot of heat right off the start. There's your February 10th entry. As with all of them, took some heat, put in some good percentages. So FTM is sitting up only about 20% here right now. But for me, you already know what's coming. Get out of the way. Keep your money, people. It's not worth it. It is not worth it. That's where I'm sitting right now. I don't see a spot to hide behind yet. I don't see locking in profits unless this hammer holds up. This might be that bullish move that we need off of the moving average here on the 4-hour. And that might be a spot I can hide behind later. But right now, I just don't see it there, but I'm flat. I sleep at night. What's on the table here? 100%. Another huge, huge percentage one. ILV. Interesting chart here. So we've talked about parabolas on ENS and some of the others before, and they always work until they don't. The thing is with gaming and what's happening with this project specifically is they're expanding very, very quickly, and they've set up a really healthy bottom here. We have a really definitive bottoming rounded off pattern with a pullback here to a really important level. This is not easy trading. This is not easy getting this aggressive and getting in this early. And sometimes you will just get burned. We didn't this time. 15%, been up as high as 25%. A lot more sitting there and a very low cap. Again, what am I doing? What's TI do? He keeps his money. I like my money. Don't take my money. JASMY, another one that just ripped out of the value zone. And you can see another really important level above. But the trade we set up here was only a 3-to-1 because we needed a much wider stop loss to get behind the huge bullish move. Turns out we didn't. We could have got a lot more aggressive. You can see that 5% stop loss would have been just fine here. But we made an exception for this one, left it open at about 12%, which only left us a 3-to-1. Having that larger stop loss would change your position size. If you don't know how that works, hop over to the Discord, get in the training, get that figured out. You have to figure out your position size. 23%, not bad. Stop loss up out of the way. If I'm feeling real unsettled or like there's something that's coming, I might lock in as little as 5 or 6%. Why? Because that'll pay for all the fees and baloney that I'm going to have to put up with any of the other coins. Loop ring, we've been chasing this one all the way down, waiting for it to get into that bottom zone. It broke the bottom here, kind of said, that's about enough for us, and is pushed out. We got a perfect pullback into the golden cross and the moving averages. And of course, we love these. This is the greatest line in all of transitioning markets, in my opinion. And that's the trend line. You are changing trends. So you have to break trend lines. And we're seeing it across the board in all the alts. OGN and ONT I was talking about earlier, both of them, massive trend line that they're trying to break. ONT is leading, obviously, because OGN is the gas for it. But it's really amazing to see some of these perfect pullbacks, technical pullbacks, and set up these moves. 4.5 to 1, 74% move sitting on the table here. This is another one we'll be out of the way on. We're up about 18, 20%, been up as much as 30%. Not going to sit here and watch Monday open on that. This is my favorite chart. This is my favorite chart because we have been grinding it. You can see 2 entries at the top here, but there's actually 3 we've been documenting in the Discord. So as we grind through this, VRA, I posted, it was just a couple days ago. So we're probably close to the same. VRA entry 1, 55%, as high as 101%. And that was on the break of our pattern here. So we put in, there's the top there. So we put in that 100% move here from our first entry back here on the break of that pattern. What are these yellow lines? That's our measurement for the potential target, and that's where our higher targets are coming from out here. What did we do then? We zoom in and we take a look at this breakout and this pullback, perfect pullback to mark the top of our pendant as support. That's entry 2. We didn't get in right at the bottom, but we did pretty good. Where are we sitting on entry 2 there? You're sitting at 60, 70%. Well, you got 60, 70%. You're sitting at 20%, like many of them. And then entry 3 gave us another pullback, and we said, you know what? We're doing aggressive entries today. We already have 2 on this, and let's put an aggressive entry here. And this is your February 10th entry on VRA. So we tripled down on VRA. It took some heat and is in the green still. What am I going to do here? Where did you get in? That's the question. And that's why I like this chart. There's so much to talk about as far as your strategy and what you're doing. VRA is one I'm in. I'm only in from the first entry. I did not take the next 2. I also have a little bag. I told you I bought this one in October of 2020. And that's back here. So this is where I bought. I bought right here. Let's we'll just put a little line there. Somewhere about there. I think it started with an 8 though. Yeah, right around there. In October. There we go. That's just about perfect. So that's where I bought in. What happened when I put in my tiny little bit of value zone money there? It lost 67% for a very long time. It sat there for months, nearly a year before I was even a little bit profitable. Then what happened? I started paying attention. What kind of percentage? That's not that much. This isn't that much. We're on a log chart. This is plenty. Watch this. We'll take from my buy and we'll go to that first break and hook. You're already up those hundreds of percent that I was talking about early in a transition market. You'll get hundreds of percent on value zone buys. What happens then? Bull market. All right, off we go. Keeping an eye on those percentages. Yeah, that's 6,800%. The actual top put in 10,000, almost 11,000% from my buy. I'm not rich. It wasn't enough money to do that. It was enough money to turn a small amount into a massive amount by comparison. And that's where I mean, if you have a good investing strategy for the crypto, you can make all the money you need. You don't have to be a trader, but you have to have the mindset to get out of trading and into investing. Now, I've gone from primarily an investor to mostly a trader now, because becoming a good trader takes a lot longer, in my opinion. It is a lot more emotionally balanced, technically balanced, to look at value zones, value opportunities, and position size and not even have to worry about your day-to-day risk that we just went through all of these top charts to try and manage. That's a totally different person. And that's where I think a lot of traders don't realize who they are. I'm not saying you're going to get 10,000% on your favorite alts, but I'm telling you, if you get into value zones on really good projects, the next bull market will reward you for that. And that's a huge part of where I put my energy and have been putting my energy through this bear market, is finding those lower zones, finding those opportunities, and we may not be done. If this thing turns sour again, we may not be done. So I will jump over. I'm just going to reference my Discord notes here because there are 3 actually. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 total charts that we had pulled up in this aggressive zone. And I will show you the other ones that did not work out. So let's do that very quickly. NMR. NMR. So the AI sentiment kicked in, and NMR was one of the laggers behind, but it put in a pretty good move back up to its 50. We got in right here aggressively and got stopped out on that pullback. You'll see the 10th is right there. February 10th was our entry, and that's the pullback that got us on NMR. OP is out in price discovery, and we took a very aggressive opportunity there, but we haven't seen anything out in price discovery in a while, so it was interesting to try to get into that. So we got to pull back into some good levels here. There's February 10th, and that's the big pullback that got us. They came back for that whole chunk, and we were just tucked in right in there behind the price action of the couple days before. So very, very aggressive. Didn't work out, but if your stop loss was lower, your position size was appropriate, you're still in the green. Moving on to the last of the losers, and that is sand. The metaverse conversation got big, but look at this nasty thing. So you can see the top of a pendant, you can see the bottom of a pendant, and then you get the, what the heck? No, thank you. They flushed out both sides. And of course, this lower end is what caught us. We were holding on to this pendant, expecting a very low wick outside of it, getting just outside of the meaningful price action to the left. And that one nibbled us off there right at the heels. So that one's really interesting. It's doing exactly what we expected after doing what we were leveraged with our risk against. And that's fine. So we lost a little bit on 3, and we're gaining a lot on the other ones, especially like VRA and Filecoin, just ripping it up. JASMY. So the last one I will talk about here, and then I'll just segue into the China stuff very quickly, is the Tezos. And this is one I didn't even put a long chart on it with a target and a stop loss. Didn't even go that far because we know the way Tezos behaves. It just doesn't like to do what it's supposed to do. It doesn't like to hear what it should be like. It doesn't like to be told. Nobody's its boss. And here we are again with another one. That's the stop that came and got us. We were aggressive in behind here. And if you had a better position size, less risk on the table, and you understood your system and didn't try to adopt what I was putting out there on the 10th, you're doing very well right now in 2 of our losses. And so that's just a testament to the way different traders can do different things with very similar kind of courses of action, but all you had to do was adjust a stop loss and a position size, and all of a sudden your risk parameters are very different than mine, and that needs to fit in your head, not in mine. I don't like Mike's risk parameters. Don't fit in my head very good. I like mine, and that's why I've been more successful over the last few years, because I stopped trying to implement other people's ideas of what should or shouldn't be. Well, this is the target, I say. Well, I see a different target here, and I'm more conservative than you. I am going to move my stop loss and trail in behind. You're not going to. There are different ways of doing the same things. And while the results for most traders will always be a loss, if you have a system that works for you, you can be successful as a trader. Don't get discouraged, put in the work, learn yourself, beat yourself first, because you're not going to beat the market.
I remember when we were just talking about Tezos, the potential for Tezos to go under $1. I remember how exciting that was. And they came all the way down to 72. It took a long time for that one. Real quick, before you go into, it sounds like maybe some fundamentals, I just want to share some of the stuff going on in the YouTube chat. So Tammy said hi. Haynes, I think it is, or Hans said hi. Jordan Levy said hi. And Jordan says he's bullish until the Fed pivots. He thinks we should get at least 29.36 CME gaps That's 2936K. And then we also have one Fry who dropped in to say hi, and he wanted to ask, does File have a functional product yet?
Yes, they do.
Okay, I thought they did, but I didn't want to misquote, so I said I would ask you. So just wanted to say hey to everybody on YouTube. It's good to see some familiar faces, and good to have you all with us.
There's the link for the Discord there in our description on our YouTube. It's also in the chat there. If you have any questions about what you've seen here today, hop into the Discord. It's free to get into. Lots of areas of conversation there, lots of people to run things by. You can drop charts, fundamentals, whatever it is you want to talk about. We have a meme section, which is, I mean, clearly my favorite. And it's a pretty casual time. There's no obligation on your part to be or say anything there, but hop in and have a conversation with us. Have you seen the NEO chart, Mike? It has been a minute for me, and I hopped over to NEO this morning and I was like, what is going on? So if you don't know, NEO is a China coin, and that's what I'm segueing into here, that has been around for a very long time. It was the Ethereum killer out of China. It was the Cardano of China. Ooh, and it's really interesting to see, well, massive pump today, which is why it's getting people's attention. Yeah. But as you look back, look at that box of craziness. Do you remember at $200 thinking $5? Never. End of the bear market in 2018. NEO's dead. It's never coming back.
It was such a different time then.
I do. Like $3.88 NEO from $200. Who would have thunk it? Next bull market fails to make a new high. Oh, it's over. $144. That we got to set a new all-time high. We got to pump this. We got to keep going. Well, it came all the way back to what? $5 again. What a range. And this is what I talk about. If you're getting into investing and you see something like this, you can go into the fundamentals all you want. This is known technically as a range. There's a chart we've been following in our with our community members here. Link has been in a range, and there's a range within a range here. And we've been talking about different opportunities, how to trade it, where to be looking at. And essentially a range is a pattern that is likely to continue the opposite of the way it came in. So we came in from the top, we will likely exit through the bottom. And then you can measure them out and do all the rest, but that's not what we're here to do. We're here to talk about a range. And this sideways move is sometimes called a pole. And it is really interesting when you find something like NEO on a massive scale, because your investments can be trading into this. Whereas now this is a week chart on Chainlink. So look at how long this has been going on the daily. And look how tight those ranges are. We've been talking about this. You can trade the inner range, you can trade the inner and the outer range, or you can just trade the outer range. In the outer range, you buy when Link is down here. You sell when Link is up here. You don't get too crazy about it. You can stagger your buys and stagger your sells if you want. But if you're more of a day trader, you're swinging from one trade to the next, you can probably get in for a few days and trade this inner cycle, because it's also very, very, very reliable. And it's giving you opportunities at the top and buys at the bottom. Very, very cool to see. Anyway, I noticed that on NEO and I was like, that is, and then it's pumping today because of the sentiment around China. So yeah, this idea that there's a China coin resurgence is, it has some legs. China is easing a lot of their pandemic restrictions, which have been exceptionally difficult and right up until recently. And in addition to that, we're seeing Hong Kong wade into crypto for the first time, legalizing Bitcoin coming up in June. We've just got notice from Justin Sun this morning, big news for us. Huobi is applying in Hong Kong to be one of their investment money distributor people, whatever. A lot of exchanges are already there, and they're setting up a framework with regulations and opportunity, of course, for taxes and such as well, where it will be 100% legal. So this is kind of a leg into China's territory. And while crypto is pretty insignificant in the big scheme of things, there's a lot of tension around Hong Kong as well. So this whole thing could backfire as Hong Kong is moving in more of a open-minded, let's accept this, we'll manage it and figure it out sort of mindset, whereas China is forcing its central bank digital currency or version of on its population and almost outlying essentially the majority of crypto as a whole. So this is good. I think there's a lot of opportunity here within China and Hong Kong for growth. I don't think it lasts till June. I think March is going to be a very difficult month across the markets, and I won't be surprised to see a pretty significant pullback. And it's one of those reasons why I'm waiting for Bitcoin to prove your FOMO rally or prove this is a bull market. Make your choice. It's taken its time, as the markets always do, so we're not in a rush to figure that out. But if you're into China and want to talk about the China coins, hop into that Discord. Let's have a chat about it. We're going to wrap things up here very shortly, but we'll take any other requests you guys have. And I don't see any other ones here. I will get back to you about Filecoin in the Discord there, guys. Was it One Fry that asked about that, I think?
Yeah, it was.
Does it have functional product? Okay, I'll get back to you there on that One Fry. I got a couple other folks I need to get back to in DMs as well. Slow day for me. I'm out to visit some family, but we'll be in that Discord pretty much all the rest of the time. And if you guys need anything from us as far as training, as far as help balancing your own emotions or your own systems, that's what we're here to do. TradeX is primarily based not around trading and investing. It's around community and education. It's around supporting each other to find the way that works for you, because the way that works for me is not going to work for Mike, and the way that works for Mike is not going to work for me. I've been saying this for so long. You got to do you. You can take little bits of Mike, you can take little bits of me, a whole lot of you, whatever combination works for you. But putting up trades and putting up chart ideas, showing success, that's what the hard work result is. That doesn't mean you can just piggyback somebody else's trades and have success. Although some people are doing just fine with it in the short term because they're applying their own limits to it. I got out early. I held on to this one. Great. You're making your own calls. You're starting to develop your own system, your own personality for this market and this industry. And as a trader, that's essential. I just can't say it enough. If you're struggling, there are plenty of opportunities for help. I have a ton of resources bookmarked of just about anything you can imagine as far as trading and investing goes. And I get asked some weird questions often enough as well. I was asked about a gold business and the gold market as a whole this morning. And I have enough understanding of it without going into the fundamentals of the business to have a vision of what's happening in the metals. And it very closely aligns with what's happening in crypto and Bitcoin. So let's see where this goes. I think we're on to a great start of something here at TradeX. It's been almost a full year now. We're going to have like a 1-year anniversary party or something. And we're finally really kind of settling into a pattern of growth, stability, success. And I hope you guys are enjoying your journey with us. And if you know of anybody else looking for some help, just send them to the free Discord to start. It's a great place just to dabble your feet, see what else we do, and have some conversation. So I will see you guys there. I'll leave it to Mike to close things out. Thank you all for being here.
I agree with everything Ti just said. I think it's been, we started TXA as we slid into a bear market, and probably one of the most challenging times to try and convince people trading and investing in crypto can be successful, because most people in a bear market, unless you have access to shorting, are losing money. And a lot of times they don't know exactly why or how. They don't understand the trend or the big picture, where we are in the market cycles. But we started it because, as Ti said, we cared more about the education and more about the community than just getting rich quick or telling you what to do so you can make one successful trade and throw money at people and then end up losing trades later, and nobody's there to help you when that happens. So, I strongly encourage all of you. We're getting to that point where you end up in the situation where it was too late to make certain moves that you want to make. So now is the time to dig into the books, to dig into those resources Ti is talking about, to use the community as your greatest asset right now. I've been kind of quiet because I was teaching for a while during the bear market to bring in money for the house. I've still been building out iNodes through the whole bear market. We just crossed 500 shared nodes.
500 nodes.
Data center. Woohoo! So there's been a lot going on, but please don't let that make you think that we're not here to help. I'm more than happy if anyone reaches out when they do to share all the insight that I've gained since middle of 2017 following this market, penny stocks before that, and just understanding how to make money for yourself in a way you're comfortable in a volatile situation, which again looks different for everybody's TI said. So I'll be in Discord as well. Feel free to reach out. We are all still here. We are still building. And as this market develops and grows, I'm sure we'll see new faces come along. It always happens when the market gets exciting. People find their way into places because it's in the news, or it's the coming back as a trendable thing. And we haven't changed. We've been here the whole time, and we'll continue to do that no matter what the market does, with the goal of helping everyone in the community to strengthen their own game and find more of their own success. One Fry says, thanks guys, only genuine group out there. Appreciate that, One Fry. And looking forward to hopefully having some fun, bullish conversations with some of you in the near future again, because it's been a long patient slide down that we have been enduring. So
it's been a great opportunity though for
absolutely
testing systems,
learning
for
opportunity,
really managing your risk.
Yeah,
this was, like Mike said earlier, this is the time to build. And for
absolutely.
me, what I built is the first time I've had the opportunity with my own money and publicly to be able to trade into a bear market almost exclusively with long positions. And it's so different than with a bull market. It's so different than with a transitioning market. And while I've been doing this almost as long as Mike, I've been about fall of 2017, the number of hours that I've put into trying to learn how to trade before it really finally clicked for me to be able to have the opportunity to stretch those legs within a bear market was way, way, way more beneficial than stretching its legs through a bull market. I've traded bull markets. I haven't really had the opportunity to trade a true bull market like 2018. I traded some, but I didn't have my education. I didn't have my system. I didn't have my brain right. And here I am, finally checked those boxes off 5 years later, making it happen. And that's about the right timeline. The first year of trading or two is rough. Doesn't even matter what kind of market you're in, unless you just get into a bull market, ride it up. Odds are you're just going to lose it all anyway, because you haven't learned anything. Right. So you need to put in those extra years of hard work, hard time, and hard training to really make it work.
I would almost say
its first trade 2014, 2015. Holy.
I would almost say that if you start in a bull market, you almost set yourself up worse. I think if you can start in a bear market, or at least in a sideways market, you are going to learn how to survive so much better, because a bull market, especially in crypto, will lull you into such a false sense of security in thinking that you can do things that you just can't in bear or sideways markets even. If you can survive a bear market, you can definitely survive a bull market, but it does not work the other way around. So thank you all for sticking with us for the last year. Good to see you. Those of you in the chat, I hope I didn't pronounce this wrong, Hans or Haynes, and also One Fry, and also Tammy and Jordan. It was good to see you guys, and hopefully we hear from you more in Discord. Anybody else who's watching this, who's new or who's just lurking and quiet, please feel free to reach out in Discord. We are always there and happy to help. Thanks, TI. This was a really fun room. It's good to see everybody.